Why rising foreclosure headlines are not a red flag for today's housing market. If you've seen headlines saying foreclosure activity has been climbing for 10 straight months, it's easy to assume that's a sign of trouble for the housing market. But when you look at the full picture, a few simple truths become clear. Today's foreclosure numbers are in line with what's considered normal. Home equity is keeping most homeowners in a strong financial position. None of the data points to a big wave of distressed sales that'll crash the market. Foreclosure filings are up 32%, but that doesn't mean the market's in trouble. If you peel the layers all the way back, what everyone is actually worried about is that we're headed for a repeat of what happened in 2008. Back then, riskier lending practices and an oversupply of homes for sale brought home prices down and led to significant increases in foreclosures. A lot of people felt the impact, but this isn't the same situation. Yes, Adam data shows foreclosure filings are up 32% year over year, and that increase is going to sound dramatic. But context matters, and it doesn't mean we're headed for another crash. And the numbers prove it. Take a look at the chart that Josh just put up for us on ronsiegelradio.tv, any of our socials, or the ABC News and Talk AM 1490 FM 98.1 video feed, showing a chart of foreclosure activity. Now, if you look at the red lines in the chart, those are all over 1 million. We're in the blue section, not anywhere close to those red lines. The Adam data shows foreclosure filings up 32% year over year. And if you look at where we were during the last crash, that's the red in the graph. Well, we're now securely in the blue. And you can see the foreclosure is different when you look at the 4 years of the housing crash, which is now on the screen, versus the last 4 years. We're just fractions of where we were. Even with the uptick lately, we're nowhere near crash levels, far from it. This is not a return to crisis levels. What it is a return to normal. The graph we're going to show next shows foreclosure filings going all the way back to the year early 2005, the lead up to and the aftermath of the crash is there in red. Those are the years when foreclosure filings went above the 1 million mark each year. Now look at the right side and scan back to 2017 to 2019 range, the last truly normal years for housing. You'll see we're actually just starting to fall back in line with what's typical for the market, even with the increase lately. So you're saying we're still below where we were in 2017 to 19. Rob Barber, CEO of Adam, explains it well. Quote, foreclosure activity increased in 2025, reflecting a continued normalization of the housing market following several years of historically low levels. While filings, starts, and repossessions all rose compared to 2024, foreclosure activity remains well below pre-pandemic norms and a fraction of what we saw during the last housing crisis. Today's uptick is being driven more by market recalibration than widespread homeownership distress, with strong equity positions and more disciplined lending continuing to limit risk, unquote. The word, quote unquote, normalization in that quote is extra important. While economic and financial pressures are putting a strain on some homeowners, this isn't a flood of distressed homes. No matter what the headlines may have you believe, this isn't a large-scale crisis. Today's increases isn't a sign of trouble. It's a return to normal. Why isn't this a repeat of 2008? Even though the last housing crash still shapes how a lot of people interpret today's news, the reality is this is a different market. Lending standards are stronger, borrowers are more qualified, and homeowners have far more equity. And that equity piece is especially important. Over the last 5 years, home prices have risen significantly. For many people, their house is worth far more than they paid for it. That means most homeowners have a strong financial cushion to fall back on if needed. Basically, if someone faces hardship today, they often have the option to sell and maybe even walk away with money in their pocket instead of going through foreclosure. That's a major contrast to 2008, when many homeowners owed more than their home was worth. Bottom line, foreclosure activity may be rising, but it's still well within a normal range and nowhere near the danger zones of the past. But the headlines are doing more to terrify than to clarify, and that's exactly why having a trusted real estate expert you can call on is so important. And that's why having a consumer advocate is imperative. That's what we do. When you hear something in the news or see something on social about housing that worries you, please reach out so you have the context to understand what's really happening and how it impacts you, if at all. That's the Real-Time Real Estate segment brought to you by rsrmoney.com, rsrmoney.com.